Hey friends, welcome back to the channel. How's everyone doing today? Because honestly, I don't get why more people aren't excited about this market right now. If you're sitting there looking gloomy, scratching your head, wondering if it's too risky, let me tell you something. This market is one of the easiest ones to make money in that we've had in years. It's wild, it's chaotic, and it's full of opportunities that most people just aren't paying attention to. And yes, you guessed it. Today we're talking about Bigbear.Ai. It's October, we're officially in spooky season, and it kind of fits, doesn't it? Because this market has been nothing short of spooky for investors lately. The volatility is insane, the speculation is endless, and yet there's still massive potential waiting to be unlocked. We've got roughly 3 months left before we close out the year, and I genuinely believe these last few months could be the most explosive of 2025. Some people are panicking, saying a market collapse is coming. Others are doubling down, convinced the best rally is still ahead. And honestly, I think the truth is somewhere in between. There's still plenty of room for opportunities before we hit January 2026. Now let's get to the main topic. Where exactly could Bigbear.Ai be heading as we approach 2026? And what does the next year look like for this company? I've been following Big Bear for a while now, actually almost exactly a year. Around September or October last year, I quietly started buying in. Back then, Big Bear was trading between $1 and $2, and the sentiment was rough. The company barely had any major deals on the table. It was operating in the shadows of giants, struggling for attention, and there wasn't much hype around it at all. But that changed around November, when Big Bear announced its first big defense contract. That moment, that was the first spark. The stock finally caught some attention. People began asking, wait, what is this company? What do they actually do? And I remember sitting there thinking, if this thing gains traction, even a little bit of FOMO could push the price up quickly. Because that's how small cap AI defense plays work. Once the herd catches wind, it moves fast. Now, over the past year, we've seen other companies like Palantir and SoFi establish solid business models and predictable growth patterns. They've found their lane. Big Bear, on the other hand, is still trying to define its place. It's still in the phase of proving itself, building connections, and showing it can consistently land deals that actually matter. That's where the opportunity and the risk both come from. Let's talk about the next few months, the final stretch of 2025. The way I see it, Big Bear's situation could go one of two ways from here. Right now, all eyes are on the company's upcoming third quarter results. Based on the previous reports, I'd estimate revenue might come in around $35 to $36 million. That's not terrible, but it's not enough to silence the critics either. Big Bear needs more than that to keep its upward momentum going. If you remember earlier this year, Q1 looked promising. They missed their quarterly target by only a couple of million, but it felt like things were finally moving in the right direction. Investors were optimistic, deals were stacking, sentiment was improving, and the chart was looking healthy. Then came Q2, and it was like the air got sucked out of the room. The numbers dropped, the results were worse than Q1, and everyone started questioning what went wrong. The math simply wasn't adding up. Now, heading into Q3, the hope is that all the deals they've signed since mid-year will start to compound. Some of those contracts, especially the newer ones, may not have shown up in previous reports yet. If those start showing up this quarter, we could see a nice revenue surprise. But here's the catch. Even if this turns out to be Big Bear's best quarter of the year, we still don't know if it'll be good enough to push it over that critical threshold investors are looking for. That solid quarterly performance that proves the business is turning the corner. The problem is that many of Big Bear's recent deals, particularly with airlines, are private. We don't know the dollar value of these contracts. Airlines often prefer to keep that information confidential, which makes it incredibly hard for analysts, or for us, to model their future revenue accurately. So yes, there's still a lot of uncertainty baked into this story. Now, let me be clear. I'm not trying to be negative. I'm not here to bash the company. I'm here to bring balance, to give both sides of the argument, because too many people only focus on hype. Before Q2 dropped, I was extremely bullish. I believed in the long-term vision. I still do. I genuinely think Big Bear has a chance to establish itself as a powerful player in defense and aviation analytics over the next few years. but I also have to stay realistic. The truth is, unless Big Bear starts landing larger and more consistent contracts, this stock won't be able to sustain a double-digit share price for long. Sure, it could spike to $10 on momentum, but holding that level requires consistent execution, quarter after quarter, and right now the financials don't support that. That's why, even though I expect a short-term rally going into Q3, I'm cautious. I think Big Bear's price could climb to the $8–10 range before the quarterly release, maybe even a little higher if the overall market stays strong. But when that report drops, if the numbers disappoint again, the big players, the institutions, the funds, will take their profits and pull out, just like they did after Q2. So if you're trading or investing short-term, don't be naive. Watch for that run-up. And if you see profits on the table, take them. Don't get caught holding the bag while others are exiting. Now, looking long-term, I'm still optimistic about 2026. This year has been huge for Big Bear. The company's transformation from a struggling data analytics firm to a credible AI defense contractor has been impressive. They're now in the same conversation as other defense-related AI companies. They've landed multiple government and defense contracts, which are typically multi-year deals. That's what makes defense contracts so powerful. They bring in recurring revenue over several years. Think about Palantir again. They've built an empire by stacking defense contracts one after another. Many of those deals started small and then expanded. Departments came back and said, "Hey, we like this. Let's extend it." That's how long-term growth happens in this space. So yes, there's absolutely a world where Big Bear can do something similar. If they can continue signing multi-year contracts, both in defense and commercial aviation, we're talking about a company that could finally stabilize revenue and build long-term momentum. The airline side of the business is particularly interesting. In 2025, Big Bear started showing up in aviation partnerships with companies like those operating in Nashville and beyond. If they keep growing that part of their portfolio while maintaining their defense presence, it could create multiple revenue streams, reducing dependency on a single sector. That's what I'll be watching closely in 2026. Now let's get back to reality for a moment. If Big Bear doesn't deliver stronger results in Q3, the same pattern we saw earlier this year could repeat. A run-up before earnings, a sharp sell-off afterward, and then a reset. So, if you see the stock running and you're sitting on nice gains, it's perfectly fine to lock in profits. Don't let anyone make you feel bad for selling. This isn't about emotions. It's about discipline and understanding market cycles. Big Bear is still in the construction phase as a business. It's messy. It's unpredictable. But that's what early growth companies look like. You're literally watching the foundation of a potential future leader being built right now, brick by brick, contract by contract. Remember, a year ago, nobody cared about Big Bear. It wasn't even considered a serious AI or defense play. Now, it's on the radar. It's part of the conversation. That's progress, and it's happened fast. Looking ahead, I don't think defense spending is going anywhere. No matter which administration takes office in 2026, defense and AI technologies will continue to get massive funding. Every major nation is racing to develop smarter, faster, more autonomous systems. That's a secular trend that isn't slowing down anytime soon. Big Bear is in the early stages of riding that wave. So yes, short-term, the price might fluctuate. But long-term, there's a real chance this company grows into something much bigger. Still, I'll say it again. When there's profit on the table, take it. Big Bear isn't going to disappear. You'll get more opportunities to buy back in. This stock has proven that multiple times this year. It moves in big cycles. It surges, it cools off, then it climbs again. It's like a heartbeat. Until the company starts consistently beating expectations, that's just the nature of the game. Let me put it this way. If Big Bear were to land even a single $100 million defense contract, it could be a complete game changer. That kind of deal would reshape their balance sheet, boost investor confidence, and potentially re-rate the entire stock. And honestly, a $100 million deal in this sector isn't that crazy. Companies like Palantir have signed contracts of that size, and much bigger, over the past few years. So yes, the potential is there. The path is there. It's just a matter of execution. Big Bear's mix of defense analytics, AI software, and aviation partnerships gives it multiple avenues for revenue growth. The question now is, can they scale fast enough to prove to the market that this isn't just a story stock anymore, but a serious player in applied artificial intelligence? So, my message to all of you is this: stay patient, stay alert, and stay smart. We're heading into one of the most critical earnings seasons of the year. The next few weeks will reveal a lot, not just for Big Bear, but for tech and AI stocks across the board. If rate cuts happen, the market will likely cycle higher, which could push Big Bear up along with it. That could mean another opportunity to capture profits as the price moves back toward the $8 to $10 zone. If you're buying at $5 or $6 today, that's a great setup. You're positioned to benefit from the rally if it happens. But remember, when that run-up comes, don't get greedy. Take profits when they're available. That's how you stay in control. As investors, our job isn't to fall in love with a stock. It's to manage risk and grow our capital. Be honest with yourself about your time horizon, your exit plan, and your tolerance for volatility. Because yes, I love Big Bear's story. I'm bullish long-term, but I'm also realistic. And right now, I'm not convinced they'll beat expectations this quarter. I hope I'm wrong. I want them to surprise everyone, but I'm preparing for both outcomes. And that's exactly what smart investing looks like. So hang tight, stay focused, and remember, this isn't the end of the story for Big Bear. It's just the early chapters of something that could become very, very interesting in the years ahead. If they can execute, if they can prove that their business model scales, this company could be one of the AI underdogs that shocks everyone in 2026 and beyond. Until then, stay sharp, stay patient, and keep learning. Because in this market, information and timing are everything. This is not financial advice.